Taiwan is around 0.6% in the red.
One thing I can project for certainty is volatility in the market.
If US falls another 10-15%, at some point we will catch up.
The long-term trajectory of India's growth has become much more clear post-pandemic, and versus the rest of the world, it looks especially attractive.
The Nifty is opening about 49 points lower.
Corporate earnings are also slated to be pretty significantly higher than last year and expected also to remain strong in the next year.
The HAL's order book is concerned today. As of today, it stands at around 85,000 crores. In fact, there is an accretion of another 3,000 crores during the current financial year.
Going forward, even after lifting, we are not going to change our business model a large extent.
From the day's low, we managed to recover close to about 70 points on the Nifty.
SpiceJet has been under a lot of pressure because the company is going through a severe balance sheet crisis. We've been reporting this for the last several months, and the latest is that 80 pilots have been put on a leave without pay for the next 3 months.
So right now, as we speak, we're down about 0.5%.
Good afternoon and welcome to Closing Bell. I'm Anuj, with me, Shant and Nigel. And this is a market which is very resilient over the last couple of months. You've thrown everything at it, inflation, recession, whatever. Today, even Putin, and nothing seems to sort of worry the market. There's a bit of a nick that you're seeing again towards the end, but let's see if that also gets bought. Two stocks stand out in the strength, which is Reliance and ITC, which are doing bulk of heavy lifting. As you can see in the contribution plate, Reliance and ITC contributing a lot. Of course, on the downside, couple of financials, but reasonably strong market. And if it ends here, it will be a good outcome, especially heading into the Fed meet. And then, of course, we'll take it from there. Nigel, hi.
Anuj, hi. Nigel, hi. Even if we go in with about a 50-odd point cut, the market will be heading into this Fed event with lots of outperformance. And this is a point we were discussing yesterday. Is it possible that the market completely avoids bad global cues and then reacts to good global cues? By the way, it's entirely possible, and history does show that on the day of the Fed, and we've had 275 basis point hikes before as well. On the day of the Fed, the dollar weakens, and sometimes equities do well, sometimes equities do badly, not too badly. On the day of the Fed is usually not that bad. The real reaction comes a day later. So US is already down quite a bit going into this particular meeting. And the bar for the meeting outcome to be considered very hawkish and the market to react in a very negative way is quite high. So if the reaction actually is positive tomorrow morning, given all that the market has done here, on the upside, is it possible we do more and react and participate along with the US? So it's a fascinating time to track markets because of the very strong different parts, different ways that markets here and markets around the world have been taking. Nigel, hi.
Well, good afternoon, gentlemen. Let's see how the final 60 minutes goes before we get to hear from the Fed. First up, though, let's run you through what we have on the show for you. To talk all things market, discuss the key sectors and stocks that you should be remaining invested in. We'll be joined by Sanjay Mukim, Head of India Equity Research and Strategist at JP Morgan, from the sidelines of the JP Morgan India Investor Summit. The FMCG pack, that's buzzing in trade with stocks like Britannia, HUL as well as Marico, all of them gaining more than 1%. What's here in the up move? We'll get a detailed analysis coming up in just a bit. City gas distribution companies are also in focus on the back of UBS brokerage note. More details on that report coming up in just a bit. All that and more in the next 60 minutes.
Okay, but as always, we start the show with last hour calls, and we have Mitesh Thakkar joining us for that. Mitesh, hi, good afternoon. So, very interesting kind of market. Again, the plunge was bought, but it's still down. Your thoughts on the index action and your stock calls?
Yeah, good afternoon, Anuj. You're right, the plunge was bought, but then there was no strong follow-through happening at the upper end of the range. So I think it's still a market which will possibly consolidate, not go anywhere. And we can now safely say that 17,850, 900 becomes the upper end and 17,500, 450 becomes the lower end of the range. So in that sense, trade with some kind of sideways bias. I have a buy on ITC and a sell on PFC. ITC is clearly given a fresh breakout, so it's a buy with a stop below 338 for targets of 350. And Power Finance Corporation is breaking down, that's a sell. Keep a stop at about 114.5, look for targets of 106.
Okay, all right, Mitesh, thank you very much. Good speaking with you. Appreciate you joining in with that. So that's trading ideas coming in from Mitesh at this point in time. Prakash Devan is joining us now to take some questions. Prakash, good to have you back on the program. Thank you very much. The move and the outperformance is extremely remarkable. But I want to start with what's happening on the Adani, now Adani, but the cement names, Ambuja, which is down about 5%, ACC, which is down 6%. What did you make of the news in terms of the pledging which came through yesterday evening?
Good afternoon, Prashant. So, I don't think it's been very surprising. The fact that they had infused a lot of capital while they would not want to be constrained by that capital getting locked up, it's a very normal thing to utilize that money because as a group, they are into so much of expansion on so many different fronts. I'm sure they have multiple plans and appetite for capital allocation. So I don't think that was very strange of sorts. But yes, the market probably sees that as a pause of sorts in terms of whatever were to happen with the money that was brought in. And it would take some time. But my sense is the consolidation that we are talking about is not going to be so widespread. Any businessman would want to focus on expanding their own capacities organically as well, and then look at those other things which are much easier relatively in terms of timeline. So I think it was a little bit of an overdone trade, and it's just taken a pause, which is good. And some consolidation won't harm both the counters going ahead from where they are.
All right, and to be fair, in the letter of the open offer, they had indicated that this could be the case, and they could be looking at pledging some of these shares. That's way back in August. So they've gone ahead and done it, but I think they'd given a heads up as well a little bit earlier. Prakash, talking about cement, Dalmia Bharat, the go-to stock from the cement pack as per you, or do you believe that the other ones are offering better value now?
So, good afternoon, Nigel. So, I think it continues to offer a lot of salience in terms of their ability to keep on building efficiencies while expanding on the brownfield side so effectively. But what's going to be interesting now is the M&A part, which I referred to earlier in the case of Adani, the Adani twins, the cement twins. It's going to be now more geographically driven. So, if I were to look at somebody expanding by the inorganic route, through the inorganic route, it would make more sense in terms of, acquiring businesses which give you a far more richer spread on the geography rather than the capacities. So I think that balance is what you need to look at. And from that perspective, there could be certain names that could start looking promising. But I would still kind of give it some time because we have to digest this capacity expansion, and next year is going to be the real test when so much of all those capacities will start coming through. So Dalmia Bharat continues to be a hold or a buy even at lower levels if somebody hasn't bought in yet. But you could look at some of the other names like JK Lakshmi and all, as I was explaining, given the geographical spread. But give it some time is what I would say, Nigel. And maybe Q2 results will probably also be a good trigger to see a little bit of a sorting and sifting through the entire cement pack.
Okay. Well, just want to point out a couple of themes. One is, of course, the Bajaj twins, Finance and Finserv, both making a move on the upside. And metal stocks, the dollar's making a move. I think that is clearly reflecting in how some of these commodities may have moved. So Tata Steel and Hindalco moving to low point of the day right now. Just look at that. And the other one that stands out is McLeod Russell. From the highs, it's actually seen about a 15% slip. For the last 2-3 days, of course, we've been talking about how there's been so much excitement in McLeod Russell. And again, from upper circuit, it's sort of open. And that's the longer term chart. But pull out today's chart once again and see that upper circuit open. And now the stocks at low point of the day down about 5%. Prakash, afternoon, any thoughts on McLeod Russell and what's happening here now? And we know that there's clearly an attempt for takeover here. The market's memory is about Everready and the kind of multi-bagger it turned out from the distress levels. But do you think parallels can be drawn here?
Good afternoon, Anuj. So, interesting point that you make. People probably hope for that, given that it's in the same geography, same kind of promoter families, and one of the potential acquirers was the Burman family at some time. So McLeod Russell has gone through these failed attempts by a lot of people to restructure, acquire majority control, and move on, including the Sanjeev Goenka group in the past. But my sense is, the existing promoters, while they may not have a controlling significant majority, are not willing to yield, and that's why the role of the bankers, the role of the lenders is going to become very critical. This time around, there seems to be a little bit of a veritable plan that's been put forward by Carbon Resources. My only worry is Carbon Resources is not in this space. They don't have a presence at all, and it's a trading bet that they are looking at taking. Expanding to their business, which is much on ferrochrome and other things that go into the steel sector. Right? They do have a small business out of Hong Kong apparently, which does a bit of global trades, and this could kind of augment that. But it will be interesting because Anuj, remember the value of the tea estates that McLeod Russell sits on is far more than what the stock price tells you. It's the huge debt burden, the interest costs that actually weigh down heavily on the stock. But I'm sure there is intrinsic value provided there is some mechanism to unlock that. And this seems to be getting close to that, if not exactly there. But if all of that comes together nicely, I think you'll probably see a little bit of a reset on the stock price as well.
Prakash, any thoughts? Do you track or have tracked Karur Vysya Bank, by the way, by any chance?
Yeah. So Prashant, this has been a great run. I mean, I keep on bringing this up that when this whole reset for the relook at the banking sector happened, and I remember it was one of those days when you'd got Mr. Madhu Kela on the show. Anuj and Reema had interacted with him. From that time onwards, if you see, there's been a very clear. I mean that's just an anecdotal. I'm not creating a causation there. But I'm saying from that point onwards, if you see there's a whole, this thing about the banking sector getting into a state of relook by most investors, including institutional investors. And Karur Vysya Bank has spent a huge amount of energy, not only in cleaning its books and strengthening the balance sheet, but they've remarkably become much more efficient. And this was always one of those potential M&A candidates which added a little bit of the sparkle to the stock movement. But that stock movement from 40 to 80 plus has been phenomenal. I still feel it has potential, but it would now depend on it could not grow at the same pace at what it has done. But for investors who still hold on, the recommendation is to continue holding on to it till some trigger comes through. But fundamentally, it's just got stronger. It's not overvalued in spite of this huge run.
Okay, got it. All right. So that's the hold is what Prakash says. Well, let's shift focus then to the FMCG sector. It's ahead, it's moving higher ahead of the festive season. The FMCG index itself is up close to around 18% in this year so far. The Nifty is up only around 2.5%. Mangalam joins us to tell us more on that front. Mangalam.
That's correct. So the FMCG stocks are doing well in today's trading session, and not just in today's trading session. In fact, this year itself, like you pointed out, 18% higher on the FMCG index versus the Nifty, up around just 2%. So it's the third best performing index after the auto index as well as the PSU banks itself. The FMCG index virtually is at an all-time high without most of its stocks actually being at all-time highs. And that's the interesting part out here, because the key gainers, if you just take a look at it in today's trading session as well, we have HUL, ITC, Britannia, there's Marico, Dabur, even Patanjali Foods and Akzo Nobel doing well. The reasons why they're doing well currently are more of the same. If you just take a look at the kind of noises that we're getting from everyone around us, the festive season is approaching. There is expected pickup in rural demand after the monsoons get over. Inflation fears have been put to rest for now. Margins are expanding or likely to expand in the second half once the companies are done with exhausting their high-cost inventory. And most importantly, it is a domestic-facing sector. As there is volatility in other parts of the markets, it is less affected by global economic uncertainty. So those are factors why the FMCG index and the FMCG stocks are outperforming. But just in recent past as well, if you take a look at the management commentary, that's increasingly getting positive. For instance, Marico said that volumes in the second quarter itself would be in positive terrain, and in the second half they will see volumes accelerating towards 8 to 10 odd %. Berger Paints as well said that they're looking at strong demand in the second quarter with margin improvement in the second half of this year. And AkzoNobel joined us here on the channel this morning itself, said that by the fourth quarter, they could see margins between 15 to 17% with strong double-digit volume growth and mild green shoots seen in rural demand itself. So that's the reason why all the FMCG stocks are outperforming today and for this year so far.
Okay, all right. Thanks a lot for that. Mangalam, just take a look at the move on, a couple of these names just shooting up as we speak. Prakash, what's your view on the space? And, some of these have run up big time, but do you believe there's still value? If yes, on which one?
So, Nigel, interestingly, over the last few months, what's happened is when you saw this early part of this financial year, the input prices costs going up significantly, and that led to a lot of rationalization of processes. Some sort of a tweak in terms of even grammage, and all of that was to help build, keep the margins intact to the extent possible. And we did see a little bit of a come off on the margins as well, but in Q1, but now that input prices and costs have actually started normalizing or coming off, all of that efficiency built up that you saw in Q1 is going to help in terms of improving the margins. And if you have a festive season that is likely to be one of the best in many years, which also starts triggering a little bit of a comeback of demand from the rural side, all that combination makes for a very interesting, potent trigger for these companies to continue getting re-rated. So yes, some of them have moved up, but the ones that have joined late to the party, like the Britannias and Maricos of the world, would probably see some more legs. My favorite, of course, remains ITC, given the fact that it is offering you so much on the consumption basket, including hotels and tourism and stuff like that. That things could become very interesting from here on a structural basis as well, not just for the seasonality perspective. So yeah, the good space, but you'll have to be a bit picky because you could end up buying certain things at very expensive valuations also.
Well, by the way, look at ITC now. Wow, just phenomenal the way the stocks charged up. And it was outperforming, then had a couple of days of consolidation, and then just look at that fly away now. It's a fresh 52-week high on ITC, and was just phenomenal. Let's just spend some more time here then on Prakash. You said that's your preferred pick, but from 200 to 350, the move has been rather fast.
Yeah, Anuj, it was under-owned. A lot of hesitation given the overall cloud on the ESG front was keeping away a lot of quasi-institutional investors, the PMS kind of money that could have otherwise come in. And, interestingly, what happens is at 150 to 180, 90 zones, people who have acquired the stock continue to enjoy such amazing dividend yield that nobody would want to kind of get out of it. So while it wasn't showing you capital gains, it was definitely rewarding you in terms of the utilization of cash coming back to shareholders. So my sense is that was a setup which probably meant that nobody wanted to sell even if the price went up. And that's exactly why the rally from 200 to 340 plus has been so swift. And believe me, it could continue that way because nothing much has changed. In fact, the institutional money which has come in is a trickle, and you could probably start seeing a lot more happening. There could be justification, like a lot of revenue now comes from non-tobacco business. When that tipping point gets crossed, from that 60% to, let's say, tobacco goes under 50, you could have a very new definition of the stock, the way people look at it. So if that happens, you can imagine the kind of money that could chase this stock.
Yeah, that point is taken from Prakash. Prashant, in the last 7 or 8 years, ITC has given 70 rupees as dividend. So even the price was stuck at 200, you still got a reasonable chunk back as dividend.
Oh, absolutely. That is true. So that is the one which continues to do very, very well. Let's focus our attention on city gas distribution companies, which are also in focus on the back of a UBS note. Vahishta is here with details of what UBS is saying in the note. Vahishta, over to you.
Hi, thanks for that, Prashant. Well, UBS has released a report on the gas companies wherein they say that the CNG segment margins are actually trending higher, and UBS reiterates a buy call on Indraprastha Gas and on Mahanagar Gas. So the elevated spot LNG prices and the depreciating currency has increased the gas cost for the priority sector. which is squeezing the city gas distributors' margins in the first half of Q2 of FY23. However, the latest revision in gas allocation policy is likely having changed the city gas distributors' outlook for the better. UBS has also said that the delivered gas cost for the second half of Q2 is 30% lower than the first half of Q2, and the gross margins for September are expected to be 25 to 40% higher than the Q1 levels, which could allow the city gas distributors to absorb a potential increase in the domestic gas cost from October. So UBS has a buy call on Indraprastha gas with a target price of 630 rupees. Also a buy call on Mahanagar gas with a target price of 1280 rupees.
All right, Paisha, thanks very much for that. By the way, I remember speaking with the management of Mahanagar, was it IGL? I'm not sure, one of the two. This is, of course, must be at least a fortnight back, if not more. And this specific question on more allocation to city gas distribution companies, while it was welcome, they very explicitly said they don't know what's going to be the case. I mean, as their requirement rises, will the government continue to divert gas from other sectors of the economy, like power, fertilizer, etc., to city gas? I mean, will that continue to happen? Will they? So there was absolutely no clarity on that by their own admission. Prakash, any thoughts? City gas, MGL, IGL, etc.
No, I think you're right. I haven't heard that interaction, but that's been a little bit of a worry. In terms of, if you keep on building infrastructure, and some of them have been very aggressive, particularly MGL in this region in Mumbai and Palghar and some of those pockets. If you actually are constrained by supply, or if you end up having to buy at higher prices, you're very vulnerable, and you really don't know how long that period lasts, Prashant. So my sense is, even this report that you were referring to, which was mentioned by your colleague, it's got a lot of assumptions which don't actually end up giving you that comfort that things will pan out as exactly as what is anticipated in the near future. So it's best to kind of play on the gas production side, and you have Reliance, which probably benefits so easily, so simply and directly out of this whole thing, that if gas shortages continue, and if they continue to ramp up production from the KG basin, I don't see any reason why that benefit will not start getting accrued into the PNL. So that's not yet happened in a very significant way, but my sense is that's going to be a big trigger in the next 6 months.
All right, Prakash, thanks a lot for joining us. It was good talking to you as always. We'll take a break with the news that the market is seeing another leg down, and the Nifty is down about 88 points, and this time this decline is coming in because of Reliance, and from the intraday highs it's also seen a bit of a slip. Infosys as well is a bit lower. We'll take a break. Up next, Sanjay Mukim, head of India Equity Research and Strategist at JP Morgan, will be joining us from the sidelines of the JP Morgan India Summit.
India Equity Research and Strategist at JP Morgan. Sanjay, it's always a pleasure having you with us here on the channel. Thanks very much. I remember listening to you as the conference was, before the conference, pre-conference, you and Sajid and others. And I remember you saying that it's very unlikely that this kind of outperformance here in India is going to continue, and eventually we will fall back in line. What's the feedback you've been hearing from people at the conference, big investors, your clients who are there, and any new kind of explanations or sort of thinking around this big outperformance so far?
Good afternoon. It's always a pleasure to be on CNBC. This whole summits that we have put together at JP Morgan, we've kind of labeled it as India's rising to the challenge. Right, and that is the kind of feedback that we've had in the multiple conversations, panel speakers, company interactions over the last couple of days, because there is this focus on both those key words. There is a challenge, right, and nobody denies the tough macro environment, the uncertainties which are particularly heightened right now geopolitically, economically, monetary policy-wise, India's external account, challenges and so on. So we did hear a lot about the external environment and potentially domestically also certain uncertainties for the Indian economy and the markets as such. But there was also this tone in conversations of how India is handling those challenges and the structural advantages that the country now has in a world that's looking barren for growth over the next several years. So the feedback is, look, we acknowledge that this is a bit of a difficult time for almost everybody. But in that sort of relative comparison peer set, India does appear to have far more structural advantage, structural visibility of growth than many of our peer countries might have, at least as things stand today.
Okay. Sanjay, hi, good afternoon. So the other key talking point has been the kind of buying that we've started to see in the Indian market from foreigners once again. Do you get a sense that that is going to continue and it was not just a flash in the pan?
So Anuj, let me kind of give you a little bit of a context to what has happened in my mind in terms of foreign allocations to India. If you look at a 20-year history of India market performance, invariably India has underperformed other countries or emerging market indices when oil prices have gone up. So it was reflex for most investors earlier in the year or even late 2021 to sell India and go underweight India because we all agreed that oil prices are continuing to go up. This is the first time in 20 years that has not happened. Right? And so everybody was caught unaware. This is not what you were taught as an experienced fund manager. And this is now causing a little bit of catch up. Okay? So first, India's performance is advertising for itself. And then the second leg of this argument, Anuj, is the fact that people are now less certain about a Chinese reopening and Chinese economic outlook than they were perhaps earlier in the year. So a combination of a lack of choice of other large countries and other large markets, plus this whole performance of the market speaking for itself, I do see a renewed amount of interest amongst investors in looking at India, in saying, hey, look, something's going on. Should I be a part of it? And how do I participate in whatever's happening in the market? The challenge, and if I may leave with this comment, Anuj, is that once you land up here and start looking for fairly valued stocks, you kind of struggle a bit.
Hi, Sanjay. Good afternoon. I've been listening to what you had to say, but if you look at a fairly valued index, then maybe India's, the Nifty is at close to around 20 times, 19, 20 times odds. So we are at the higher end, or we are relatively more expensive as well. Do you believe at some point of time, we are at the higher end, so do you think some money could find its way maybe to markets like China, Latin America, and the others, or do you believe that we could sustain these premium valuations?
Good afternoon. Now, the reason I have been a particularly, nonplussed or let's say worried about over the last, like say, 4 or 5 weeks is, our outperformance to China is probably explainable. Or I can rationalize that because of the issues with the Chinese economy and so on. But this recent outperformance to the S&P 500 is a little bit more difficult to rationalize. It's because the S&P is a hard currency. It's got better near-term earnings growth and it is cheaper. Right? So if I were an asset allocator, all kind of metrics and I can analyze, I would still prefer the developed market hard currency asset over an EM Indian growth for now. Yes, of course, if you're willing to invest for 3, 5, 7 years worth of outlook, then India may provide longer, steadier growth, but very few in equity markets, as you're aware, have that kind of luxury of investment. So this little bit of outperformance that we've seen over most other economies or markets in the last few weeks, that makes me a little bit nervous. And that's what my initial comment was earlier, that there is a risk of a bit of a catch-up of Indian markets on the downside.
Sanjay, without naming names, of course not, are there any large funds which have been raised for, say, GEM funds ex-China, EM funds ex-China, that kind of, have you heard of it? Is that happening? What can you tell us? Yeah.
So it is certainly in conversation, and I've heard multiple people attempting to advertise market funds which look at an emerging basket outside, not just perhaps of China, but even North Asia, right? Excluding the Korean, Taiwanese market as well potentially. And if you do that, India will probably be a third or 35% or 40% of those kind of baskets. It is difficult to see how much money will eventually be raised for such kind of strategies. But this is part of conversation, and I've firsthand had chats with people looking to advertise and market this investment strategy.
Okay. We were talking to your IT analyst, Ankur, this morning, and he sounded extremely bearish on the sector. Are things looking that dire, or is it just because of the context in which we're talking now, the valuation context, and what's happening in the US? Because from the peak, the stocks have corrected about 30-35%.
So Anuj, this is consistent with our investment philosophy, right? And especially if you're a one-year investor or a shorter duration investor, it's not necessarily about earnings growth or the PE level, but about surprises. And we've done a lot of quant work. This is fairly well established that stocks tend to react to earnings or outcome surprises more than they react just to growth. And for the IT sector, we still think there are negative surprises due, right? And this is partly in margins, but that is now played out to some degree. We've seen margins come under pressure from the whole cohort in the last quarter. That is likely to sustain near term. But we also fear that the top line outcomes we'll get out of the Indian IT companies will be worse than what consensus has predicted. So earnings projections for IT companies may have to be revised downwards. That then combines with the fact that multiples are a little bit higher than they used to be, and you could get a multiple compression as well should outcomes start to disappoint.
Sanjay, what about the domestic themes? They have been looking up, and the street believes that the second half of this year is going to be great, and from then on we're going to see growth. One sector that's really re-rated has been cement, maybe because of the new player that's coming in there, but suddenly you have all domestic large players who are going to be out there. They're going to be on the prowl as well. But otherwise, valuation-wise, I mean, some of these stocks are trading at 16, 17, 18 times EV upon EBITDA. I haven't seen that in the last many, many years. Do you think this is justifiable, or do you think they pretty much run their course?
Well, we are in the latter camp, unfortunately, and there is obviously a lot of excitement because of the change in industry structure that we have seen recently, with people talking about consolidation happening very rapidly. These are difficult to do things, we imagine, and also if you start off from the point that no cement company is really in distress, there is no hyper leverage, excessive leverage, and at these valuations, the merits for buying something out also is debatable. So while the market would expect consolidation to happen, we don't see why there'll be too many of these people wanting to sell in the first place, because these companies no longer have leverage and they're making enough money to begin with. So I do think that you may get some, but the kind of consolidation that is being priced in might be too ambitious. And the other challenge we face is that the forecast growth in capacity over the next several quarters is likely to end up being far more than any demand growth we'll see in cement.
Sanjay, what is the I'm sure I should have asked you to think about this for a while, but what is the most non-consensus thing you've heard at the conference this time?
Well, I don't know if it's non-consensus or not, but we're starting to hear on the margin a little bit of commentary from corporates about a little bit of slowdown over the last couple of months. Now, this could be, a blip in the trend of reopening or whatever, but we wrote research after the June quarter saying, corporate commentary is really bullish, especially from a domestic consumer view, but we're starting to hear a little bit of a more somber tone from companies. This could be the fact that Diwali is due in a month and consumers might be holding back for whatever discounts are available around the festive season, but that is something that has caught our attention as having changed in the last, let's say, month or so.
Okay, that's quite interesting. So does that change the way some of these consumption names have outperformed, or does that outperformance still remain intact?
No, I don't think this is going to sustain, Anuj. And this has got nothing to do with the corporate commentary, of course, because arithmetic will suggest that as you enter the December quarter, you will get two things happening. Sequential momentum of sales improvement is slowing simply because most of the reopening is largely done and the benefits of reopening have been accrued, while the base effect for many of these companies is going to catch up. So the reported growth numbers that you will get from the entire consumer pack in India is actually going to come down very sharply from where it was in the June quarter. And in the context of these companies trading at 70, 80 times multiples, suddenly if you see single-digit growth numbers on volumes, that might be a little bit difficult to digest. But worryingly, what I fear is that those numbers will actually come in below forecast. And that could be a dampener again to this whole momentum of how this consumption story has got legs to go forever.
Okay, all right. Sanjay, thanks so much for stopping by and giving us your thoughts on the markets and sharing feedback from the conference as well. It's always a pleasure talking to you. Well, for the time being, a quick check on the markets. We've moved a little bit lower in the last 10-15 minutes or so. We're sitting with the cut-off close around 100 points or thereabouts. Not a bad outcome given the kind of run-up that we have seen. And we're heading into a big event. So some money getting taken off the table, though we're still holding on to the 17,700 odd mark. Time to slip into a short break. When you come back, Nimish will be joining to tell us what's going on in dealing rooms. And also we'll be getting our technical guest who will be back with us.
Try recovery, but there's another leg down now, which you can see on the screen. Adani Group stocks today have taken a real pounding. Adani Ports is now down about 4%. Shree Cement is now down 5%. Ultratech Cement, so clearly IndusInd Bank. So there's an angle of profit taking in the way some of these stocks are falling now. So HDFC Bank also now seeking lower levels. ONGC is down a bit. TCS has moved to low point of the day. TCS now threatening to break 3,000.65 now on TCS. Remember, Infosys today came very close to its 52-week lows. On TCS, is still some distance, about 1.5% away. The lowest 2953, the 52-week low. We're practically there on TCS as well. Let's go across to Nimesh for D-Street Chatter and find out what he has picked up. Nimesh?
Hi, Rajana. So some bit of profit booking is clearly visible in the recent outperformers, whether it's cement names or the Adani Group stocks. But from a market point of view, a day of consolidation, of course, we have a big Fed outcome to handle, which India markets will get to react only tomorrow morning. So that apart, in terms of flows, again, it's a mixed day of trade with a positive bias. And I believe there's going to be a market at close basket buying in select large cap names at a leading FID. So that might see a bit of a recovery in the large cap, some of the large cap stocks in today's trade. The most interesting feedback is a bit of nibbling in the IT stocks. That's a bit of a contra feedback. That there is some bit of buying back from large institutions. Remember, the IT Nifty index is down more than 7.5% in the last 1 week, and some bit of buying is back from the larger institutions. That's a bit of a contra feedback. In terms of other sectors, I believe even yesterday the feedback was there is a bit of buying back in the FMCG stocks. So it looks like there is a bit of defensive play now, whether it's pharma, FMCG, that's been well bid by the larger institutions. From a technical point of view, we are still in that range between 17,200 and 17,800. So any big move has to happen on the either sides of you breaking that range. So that's something to watch out from a technical perspective. But purely from a flow point of view and from the overall feedback, it looks like it's a day of consolidation. But I guess the big feedback is there is a bit of nibbling back in the IT stocks today.
Okay, and we have a big global event that's coming up later tonight. But Nimesh, individual stocks, what are you picking up?
Well, so Nigel, in terms of individual names, the first stock is Jubilant Ingreva. I believe there's going to be a couple of developments in that stock. On top of it, there is a buzz of a large block deal as well. Unlike the recent trends of promoter selling in this particular company, it's not the promoters, but looks like some institutional investors are likely to sell a big chunk in Jubilant Ingreva. So that's the first stock. The second stock is HDFC Life. That's been consolidating around that 550, 560 levels in the last few days. Last week we saw a big block of Standard Life selling out. It was a clean out trade. Now I believe one of the large long-only investor was a large seller in HDFC Life, has sold out its complete stake in the last few days. So the selling supply from a larger FII seems to be out of the way in HDFC Life now. So that's the second one. The third stock is Bajaj Finance. Within the NBFC space, this is one stock which has outperformed for the last couple of days, largely on back of strong buying interest from larger institutions, and that's the case today as well. So there is a good amount of buying. FIs are buying into Bajaj Finance in the last few days. And the last stock is Campus Activewear. Again, the entire space has been buzzing off late. Remember, 2 days back there was a Motilal report as well. And even in today's trade, Campus Activewear is one stock. There is good amount of buying interest from the larger institutions. So the delivery volumes are going to be quite high in this particular stock, largely on back of buying interest.
Okay, all right, Nimesh, always an interesting list. Thank you very much for that. So the footwear names buzzing and expected to buzz. A fair bit of activity, as Nimesh pointed out. Now, Mitesh is joining us to tell us what his BTST trades are. Mitesh, over to you.
Prashant, have a STVT on Larsen and Toubro. Keep a stop at about 1908 and look for 1870, 1875 as the target area. The other one is a sell call on National Aluminium. Metals have been weak and NALCO also looks like getting into some kind of a negative zone. So sell this one with a stop just above levels of 75.5 for targets of 71.5 to about 72.
Sense that the market maybe sort of gaps down tomorrow, what's your sense? Or no real call because you got two sells. Is that the view on the market as well?
Yeah. So Prashant, the overall view in the market is still range bound. But the way these stocks are closing, I think these stocks, even if the market kind of opens flat, I think these stocks might open with negative pressure. Of course, there's that risk of statements coming from US which could possibly change the direction. But I think as of now today, if I look like it, the bias is clearly on the negative side for these stocks.
Okay, fair point. Just on the index itself, Mitesh, once again, let's revisit. The Nifty is not yet breaking the 20-day moving average, and the Bank Nifty has been very strong still. So do you think that we can still get away with this minor cut, or are there signs perhaps that we could look at slightly sort of sharper decline?
Anuj, I think one, even if there's a big and sharp decline, I don't think it'll be a trend changing one. I think it'll be a part of this overall correction. So for example, last time when we had the decline, the Bank Nifty went to about 40,600 and the Nifty recently went to about as low as about 17,500, 450. So I think that can be revisited. I still believe that they'll be held because the medium-term charts for both the indices are quite positive.
Okay, all right. Mitesh, thanks a lot for that view. Well, let's get in Hemang Jani to join in. Hi, Hemang. The market's a little bit volatile today, but one stock that's looking pretty good is Akzo Nobel. I remember the company at one point of time was not very, very aggressive in the paint space. Today, we had the management earlier today. They're talking about double-digit volume growth, margins moving back to around 15 to around 17% from around that 13%. And also, they said that they've been gaining market share for the last few quarters, I think close to around 4 to around 5 quarters. View on the stock or on the space, from the paint space, what's your preference?
Yeah, Nigel, good afternoon. See, Akzo Nobel we don't cover, but from a consumption theme perspective, we do like some of the paint companies, and within mid-cap, we do cover Indigo Paints, which has a presence in the Tier 2, Tier 3 cities and differentiated category of product offering. So we do like some of these names for the fact that you're seeing some stability on the margin front and the overall festive season and even otherwise, you see the traction in terms of volume growth that is quite good, and particularly next 2 months, Diwali, before that about 2-3 weeks, you see the maximum traction coming through in the paint company. So we do think that there is going to be a good amount of positive buying interest on this name.
Okay, Hemang, good afternoon. What's your view on ACC and Ambuja now?
So Anuj, phenomenal move in both the names, and given the positive surprise in terms of the capital infusion and the incremental capacity that is going to come through for the combined entity, about 140 million tons, I think overall bias continues to be positive. The only thing is that the stocks have run up so much, so I think we should let it cool off a bit. But I think Ambuja would be a stock that we would definitely be looking to buy into through this correction, because I think the maximum focus and action should be in this name, given that there is a stake by Adani Group and there is a phenomenal aggressive capacity expansion plans.
No, I get that. 100 points, by the way, lower, 17,717. I mean, it's 0.5% cut basically at this point in time. Market breadth is 2:1, maybe a little more in terms of in favor of declines. But seems like just a pullback. Cement, of course, is the one area which we were discussing. A lot of names which are lower and sharply lower at that. But the rallies, of course, have also been very, very strong. Any stock picks, Hemang? Anything you'd like to discuss? Tell our viewers to take a look at now after what the market has done?
So I think you guys were discussing footwear names, and we've done initiating coverage reports on Metro Brands and Campus both, and we also had the management presenting, management presentations in our AGIC conference. So I think from a medium to long term perspective, this theme is looking like extremely good, lower penetration, huge potential in the not the top end category, which is dominated by the foreign brands, but the mass category, and given the positioning that these two guys have, we think that there is a case for a significant growth in terms of business and also in terms of earnings, about 25-30% kind of a CAGR, and we are looking at 25% kind of an upside for both these names.
What about the logistics companies, Hemang? Mahindra Logistics, the stock has been moving very, very well. I think there were some positive comments that came in from the Mahindra top management out there, and the stock has seen a big run. View on the space, and what would your pick be from the logistic theme?
So very positive on the theme per se. It had the sector itself had its own ups and downs, but I think given the fact that there's so much of consolidation happening, the crude prices are lower, and we have to reckon that even when the crude prices came off, they haven't really cut down on their pricing, and the overall volume growth has been quite stupendous. So we are extremely positive on the space, and VRL Logistics is something that we prefer at this point of time, where we see better growth visibility and a much lower valuation compared to the sector.
Okay, VRL Logistics, 653 is where that one is at. Lots of names, of course, in different segments of the market, logistics companies, and that's been a pretty hot space as well. Over a period of time. What else are you? Do you have your eye on, Hemang? Apart from what we've discussed, there is Patanjali, which is up 5%. Adani Wilmar has been doing well. These are some of the recently, not very recent, but relatively newer kind of food businesses which have come to the market. Any thoughts at all?
So Patanjali, we had Baba Ramdev ji giving a presentation on their future plans, and it was quite exciting actually. From 4,000 crore to Patanjali Food, they're looking at a turnover of 10,000 crore with a 15% kind of margins, 4 new IPOs, and both listed and unlisted level. The turnover will go from 40,000 crore to 100 lakh crore, and about 15 to 18% kind of margin. So very exciting story, and given the kind of turnaround that we've seen in Ruchi Soya post acquisition and the kind of plans that he has on the nutraceutical, etc., people are excited. It's a story for niche investors, not for everyone, but we do think that this presents a good opportunity for a lot of investors.
Tell you the other 4 listings? Did he talk about that? Because he mentioned that a week ago, saying that there are 4 other businesses which I'm going to list.
Yes, so these 4 companies he's going to list. We did not have any specific details in terms of timelines, but all the 4 companies he has plans of doing the IPO over a period of time.
What about the banking names, particularly the smaller names, the RBL banks of the world? At around 70, at around 80, 85 rupees, there's not so much interest. But now, periodically, when the stock is down, you see some kind of buying interest. And even today, as we speak, the stock has moved to the high point of the day. Would you stick to the larger names, or do you believe some of these names like RBL Bank, IDFC First Bank, some of them that have been shunned away, suddenly they're back on the buying list? You're in that camp?
So, Nigel, within the smaller banks, we like Federal Bank and IndusInd Bank. I think, it's better to stick to slightly better quality names, because typically in a bull run, there's a liking for smaller names, but sometimes when the rally fizzles out, people do get stuck. So we would be more comfortable with these 2 names.
Okay. All right, Hemang, stay with us. For the time being, though, I think we'll take a short break with news that the markets are down close to under 100 points. The Nifty Bank is pulled back close to 250 points. Final 10 minutes coming up on the other side of this short break. The metal stocks as well are very nervous as we speak. Tata Steel moving to the low point of the day. Well, the cement space as well has been in top focus over the past few weeks. Earlier today, we caught up with Mr. Kapoor, the COO of JK Cement, to understand their EBITDA, their growth roadmap as well going ahead. He also gave us a sense about Q2 FY23, which is likely to be very weak for the entire sector. Let's hear out what he had to say.
The peak of your inventories that you were holding, the expensive inventory that you had purchased in the previous couple of months is going to hit. So I am actually looking at a average 300 to 400 rupees drop in the EBITDA per ton across the industry, and therefore we won't be an exception to that. The only thing that is going to be different for that is that how other companies or how companies are able to take in some of the cost-cutting measures. And those cost-cutting measures can only, give you an advantage of about 50 to 75 rupees in terms of you have increased your alternative fuel utilizations and things like that. You're able to do some efficient, stock management. We are looking to maintain the core values of our core philosophy of our company in terms of, being firstly delivering quality product, making sure that the cost efficiencies, we are among the best in the country, and also improving the brand image and brand positioning. And I think we are well on course to becoming 25 million tons of capacity in next 2 to 3 years' time. And then we move on. So we don't actually make very big plans that we are going to be 50 million tons. We make plans for 3 to 5 years, and we are very much well on course. And you should watch this space for more announcements from our company as time comes along. Buying an asset also depends on the size of the asset, on terms of geographical dispersion of the asset. So there are a number of things. I'm not saying no. If something good comes up, yes, of course, it can be there. Our balance sheet is becoming stronger now, so we could look at it. But at this point of time, I would say that no, we are not really actively scouting for an asset. We have our own plans. We have our Panna line, which is now, we have put the first line. We have enough reserves in this, area. We could think in terms of adding a second line. We have already started, finalizing a couple of more grinding units. We have already won a mine in Jaisalmer, where in next 4 to 5 years time, we would see the plant coming up there. So we have actually a lot on our hand in terms of our greenfield and brownfield expansions.
Okay, all right. Well, that's important statements actually coming out there, because for companies that are making 800 rupees per ton of EBITDA, if he's talking about a 300 to 400 rupee dip, that means, the EBITDA per ton for this second quarter, going by what JK Cement is saying, could be even half for certain companies. So let's see whether or not that happens. That could be another factor that's playing out besides, the profit taking after the sharp run up out there. Hemang, we just asked you about ACC as well as Ambuja Cements, but what are you making of this? There is a case of profit taking, but do you think the street is prepared for a very, very weak second quarter? I think that as well is plaguing some of these cement stocks as well.
So yes, Nigel, clearly this quarter, there is not going to be any major positive surprises, given that, the raw material prices have remained firm. Petcoke came off in the last maybe 1 month or so, and we haven't really seen any major price increase except maybe a small 10-15 rupees per bag. So this quarter anyway, people are not expecting any big positive surprises. But given the excitement because of this entire Adani, acquisition and the kind of plans that they've made, some stocks have run up. So I do see a case for some sort of a correction, because across the board people are getting excited that okay, this company is going to be taken over, and it deserves a certain valuation basis the replacement cost. But I don't think that's going to happen. Maybe 1 or 2 companies, something like India Cement or Sanghi, if at all they get acquired, they would get a certain valuation, but there is going to be a major derating post that, and we do think that it's time to be cautious rather than chasing some of these mid-cap names.
Okay, Hemang, we'll let you go on that note today. Thanks a lot for joining us. Let's start doing a wrap of the market action then for the day. Suffice to say, the market was a bit nervous, though the US futures are still quite strong, so it'll be interesting to see what happens overnight. Of course, There's a bit of a nervousness ahead of the Fed meet. Maybe on margin that Putin statement may have also hurt sentiment. In terms of stocks, the Nifty is going home with almost 100-point cut. The Bank Nifty down 260. Shree Cement was down 6%. Adani Ports was down 4%. Ultratech down 3%. Hindalco, Larsen & Toubro, IndusInd Bank, Divi's Labs, Bharti Airtel, all lower in trade today. Tata Motors as well, HCL Tech. In fact, IT was quite weak. HCL Tech, TCS, Infosys, and all of them are pretty close to their 52-week lows as well. So that's on the downside. On the upside, you had FMCG names. Britannia was your top gainer, up 3%. Lever was up 1.5%. ITC was up 1.5%. And Apollo Hospitals was the other one, up 1%. Bajaj Finance as well looked quite okay over there. But Prashant, the broader market actually turned quite a bit towards the end.
Oh, it did. Market breadth, by the way, worsened, over the last 30-40 minutes or so, quite a bit. Let me just start with what was down and down on volumes. I mean, actually, it's a lot of cement today. Ambuja, ACC, Shree Cement, Nuvoco, JK Lakshmi, and more actually. So that's one space which lost quite a bit. The Adani Group stocks, I think we already highlighted. Adani Enterprises lost about 5%. What else? McLeod Russell was down 8%. Tata Investment Corporation, which is up almost 30-40% this month, gave back about 6%. Wonderla, which has been a bit of a wonder recently, that gave up about 11.5%. E-Clerks was down sharply. Was it a corporate action? I'm not sure, but that was about 15.25. That's a sharp knock on E-Clerks. What else? RK Forgings down 6%, Brigade down about 5.5%, and I can go on with a bunch of other names. So more than a fair share of losers on large volumes today. Nigel.
Well, a few gainers then. Hind Rectifier was up 20% in trade. Your Tourism Finance, the stock was up close to around 20% in today's trading session. Large block took place yesterday. Arvind Fashions, very fashionable, up close to around 10% in today's trading session. VIP Clothings as well did pretty well. And Precall as well did end well in the green. AkzoNobel was the other stock that was in focus. The management commentary was extremely positive when they spoke to us earlier today. What did see some selling? As we mentioned, some cement stocks were under pressure. So Nuvoco did pull back a goodish bit. You had UFO Movies, which was under pressure. Ramkrishna Forgings as well did take a bit of a knock. And Tata Investments, a stock that's been running up, in the last few days, well, that's come in for some profit taking. Even Brigade Enterprises, both those two stocks did get a bit of a knock. So heading into the big event, the Indian markets ended lower. The Nifty was down close to 100 points. The Nifty Bank was down more than 250 points. Breadth of the market firmly in favor in the number of stocks declining. 2 stocks declining for every 1 stock that was advancing. Well, we'll wrap up on this edition of Closing Bell, but lots lined up on our Wednesday special offering, Mad About Markets. Stay with us.